Let's take a look at Zomato now, because that one has been under pressure since the morning and 10.5% lower now. The stock has taken a bit of a beating. Street found the delivery giant's third quarter numbers a bit too bitter, as profits have fallen nearly 60% on a YOY basis. And Mahima is here, who tracks the space closely, to understand what exactly has gone wrong, Mahima, for Zomato.
Right. So, a couple of things that are not working right now for Zomato. Let's break it down one by one. The first one being that, they've kind of raised their guidance, saying that they will, do the 2,000 dark store limit by FY26, which they now said that they'll do it by FY25. But before that, food delivery growth has been stagnant for them for the past few quarters. In terms of the losses that are expanding on the going out business, that is also growing every quarter, and this going out business also includes their ticketing business, which is seeing the expansion in terms of losses. The elevated capex that I talked about earlier, that they've kind of revised their guidance. They'll now do 2,000 dark stores in 2025, which will lead to an elevated capex, and this will lead to losses, and this will go on till the next 2 quarters is what the management has said, but it'll be a wait and watch situation as to how these losses pan out, over the next, few quarters. Even the competitive intensity is kind of, going to impact the profitability and margins. There's competition coming in from Swiggy, which is a listed player, and in the quick commerce space, Zepto from the unlisted space is also, giving tough competition to the quick commerce space. Moving on to the next point, the valuations were never cheap for Zomato. Valuations right now, the current trailing P itself for Zomato is 528, and it doesn't get cheaper even by FY26 going forward. So these are the couple of points as to what is going wrong with Zomato. Now, in terms of the brokerage radar, all of these brokerages have still maintained their buy ratings towards Zomato, but a few have cut their target prices, and a few have also cut their EPS estimates because of the kind of expansion that is taking place. Now, UBS is maintained buy with a target price of 320, BOFA with a target price of 375. This is the highest target price amongst all the brokerages. Macquarie has cut it down to 290. Nuvama has cut it down to 300. Nomura has maintained buy with a target price of 290. Now, what next for Zomato? Now that Q3 has not panned out very well, what next? First of all, the execution of these 2,000 dark stores will be something to watch out for. The execution of 10 minutes delivery will also be a key factor that will kind of determine as to how much the losses will go further, or how much will profitability be impacted. For how long will the losses continue? This is a question mark. They've said 2 quarters, but we'll have to wait and watch to see as to how long they last. How long will it take the company to achieve the 5% margin mark? The company has said that they will achieve the 5% margin mark soon, but how soon will that be is a question mark. Moving on to the areas of growth with food delivery. Now that food delivery segment has stagnated, we'll have to see as to what their next focus area is, which is quick commerce, where they're expanding. But that being said, we'll have to see with respect to the kind of execution that takes place. Now, how will Zomato outpace competition is also another question. We're seeing that intense competition in the quick commerce space is coming in from Swiggy and Zepto as well. Are Blinkit's growth targets achievable? They've said that they'll grow 100% in FY25 and 26, but will these be achievable with the kind of expansion strategy and expansion plans they have is a question mark. Now, in terms of Swiggy is also tanking on the back of how Q3 has panned out for Zomato. Let's see as to how this will have an impact on Swiggy. Now that Zomato has raised its guidance, dark store guidance, we'll have to see, because it will put a pressure on Swiggy at the end of the day. Swiggy is already running into losses, and if they also plan to compete with Zomato in terms of adding dark stores, it will be a tough task for them. And right now, if they are 4 to 5 quarters away from turning into profitable, it will take a longer time to turn into profitability for them. Plus, they have a disadvantage when it comes to the cash, because they have around 10,000 odd crores of cash versus that of almost 20,000 crores for Zomato. In terms of the Swiggy's market share, we've seen the last 2 quarters they've lost market share. In comparison to that also, we'll have to see as to how this quarter will pan out for Swiggy. In terms of the competition, again, like competition is being hurt by Zomato, Swiggy is also getting hurt, and margins and growth will also remain impacted. Swiggy is also juggling into too much at once, is something that will be on the watch out for, because they're getting into ticketing business, they're getting into the sports management management business. So we'll have to see as to how they will execute all of these simultaneously. And like I said, at the end of the day, for both Swiggy as well as Zomato, execution remains very critical. So this is the overall impact as to how Zomato has panned out in Q3 and how this will impact Swiggy also, and talent war also persists for both of these counters going forward as well.